Hello everyone, I hope everyone is doing well and had a successful trading week, being that we had such a big boom in the market. I wanted to go ahead and recap on my previous video where I spoke about the strategy of supply and demand and pairing it with technical analysis to see if it was sufficient enough to become a successful trader or to increase your win rate. And the reason why I wanted to speak on that is because I noticed that the market has been extremely choppy lately, and I wanted to test out if having a good visual of the chart would lead me into a higher win rate ratio. And that is something that I have been working on this past week. But the markets have just closed. This is a recent chart that we're looking at. Today is Friday, October 19th, and we're currently looking at pound JPY. In my previous video, I did look at pound USD. And the reason why I made the switch is because I wanted to make sure that this strategy can be utilized with any pair, being that we all trade different currencies. So let's get straight into it. Here I've already marked out a few areas of supply and demand, and the reason, just to recap, is why this is a supply and demand zone area. If you look over here to the far left, you can see that we were on a bull run, and then right here there was a reversal. So now this is the new supply zone, and here is where we currently stop. So this would be the demand zone, but this is the major demand zone. So here's major 1 of the supply zone and major 2 of the demand zone. And this is looking at GJ on the 1-hour chart. So what I mentioned before is when you're using the supply and demand strategy, your opportunity to take a trade is within the imbalance of the market. And what I mean by that is once the market creates a reversal when it's on a clear trend, whether it's up or down, that is considered an imbalance within the market. And that is your opportunity to start going in and looking for quality trades. Now, being that it is Friday, we know that volume is low. And like I previously mentioned, markets have been extremely choppy. And in my video, I've mentioned how a consolidation zone or a choppy area can be tradable as well, just as long as you have a few criterias that you're able to meet. So let's talk about that and see how challenging or how successful that can actually be once we zoom into a choppy area. So the first thing I would do is I would select my major trading zones, which is my supply and my demand. And then I'll move over to the 30-minute because it's a smaller time frame that's going to give us a bit more information. Now, if you look into this area, this is where it started consolidating. So it came down to a downtrend and it started consolidating, went into an uptrend. So being that this is our most recent zone and we want to predict the live market, this would be a good area to either, depending on your trading strategy, to either scalp a good take profit or to get into an early entry to be able to ride a trade. And how you would go about doing that, your first step would be is being able to identify a consolidated area, then measuring how many potential pips you have within that area. And what you want to focus on is the body of the pips mainly, not the wick of the pips, because that's where price tends to want to lie. After that, you would need to assess which direction you're going to break out in. Now, when I decided to go ahead and zoom in on this area to see if I was able to take a quick take profit, I did see this candle beginning to form, and I did see that it was possibly creating momentum to the upside. It did reject here, but I predicted that I would be able to catch a good enough profit if it was able to reject down and then continue up to the upside. Then I would be able to at least catch some type of profit. while I was assessing this area, I did notice that it was starting to break outside of the box. So I decided not to run into that trend. And thankfully it did not, because it did reject down to the downside. Once I seen that, there was another rejection to the downside. So I decided to look to my left, and on my I decided to look to my left, and I noticed that there was a attempt to break out to the downside, which was rejected, and it created a low. So I created a trend line because my bias was for bulls. So I wanted to see what area of this trend line would be favored the most. So for the majority of the time, you can see that it was favored within the bear run. It was favored within the bear zone, because you do see there was a rejection here, another rejection. So there goes into confirmation. Then you see a rejection in the momentum candle. So if you was able to catch that momentum right there, or feel comfortable enough to go in, then that would have been 42 pips to the downside. And quickly, it definitely rejected. But that's a good, quick scalping strategy. Now, the reason why I say this is an area that is tradable, because you can catch a scalp like that, and you can catch an early entry. So if you was just to envision that if this was an early entry and it continued down, that's a good amount of pips. That's a good amount of pips that you're able to get. So let's give me one moment. Here we go. Let me measure that one more time. If we was to take profit here, that's 85 pips. That's good enough to take profit. And depending on your goals, your pip goals for the day or your profit goals for the day, that's a good enough trade to walk away for the rest of the day and be satisfied. And this is why adding the breakout strategy is useful, because when it does come to a choppy market and you do follow certain key rules that you set in place, you still are able to potentially consistently grow your profit amount or your capital. And don't risk high. You definitely have to manage your risk to reward ratio properly as well, because you are taking a risk. And, with that, you have to be able to read candles. So if we move over here to the left-hand side, not every zone is going to be a good zone. This one is a good zone. You do see that we had the momentum, a huge momentum here, quickly reversed, and you see a lot of momentum candles. So if you create another trend line to see whether it's going to play to the downside or to the upside, you can see that there was a momentum candle pushed up. And if you want to wait for another confirmation, there was a candle that closed above this box and there was another momentum. That would be a key to go ahead and enter in for a long trade. Now, let's look at this area right here. Sorry, bear with me. Let's look at this area right here where it's extremely choppy. To me, even though it played out so well, this is a zone that I wouldn't even consider trading. It's something that I will watch, but I wouldn't consider trading that. And you have to wait here for a long time. If you really look at it, the reason why it's not considered a trading area is because it's because what you have to zoom into, it's not even worth. Let's measure it before I say that. 16 pips. No, that's not even worth trying to catch any type of profit. So that's something that you would just have to watch. Maybe just highlight the area, watch it, and see if you can catch a breakout, whether to the up or the downside. But trading within that zone, that's not good. And as you can see here, you have a lot of trading potential with these three tools. So your first one is technical analysis. Your second one would be supply and demand. And your third one is going to be breakout boxes. It's going to allow you to increase your opportunities to winning trades. Now, I know this was a brief explanation. If you have any comments or you would like me to share further details of what you can do when you are starting off to trade, feel free to leave a comment below and I would be more than happy to answer. But for now, I hope this helps you, and I wish you the best with trading next week.